Good day to everyone. Today we are going to see about improving security and speed of GST tracking using AI and blockchain technology. So, what is GST? GST is a comprehensive multi-stage destination-based uniform taxation which is levied in India. India follows this Canadian type of GST in GST. So, the biggest benefit of GST is double taxation is removed through GST. So improve the GST is levied from the production till the end stage. That is the final consumer. So each and every stage, one type of tax is being levied. Okay. However, the final taxation is given only. Final tax is paid only by the final consumer. Okay. So that there are various levels of challenges in this particular GST. So this GST can be implemented using blockchain technology. So blockchain technology can be used to record all these transactions right from the production till the end consumer. All of these transactions can be recorded using blockchain. By recording all these, by the usage of blockchain technology, the we can we, it is very highly secured and distributed. So what is GST? GST is nothing but GST is a successor of VAT used in India. So GST is a digitized form of VAT. Okay, so it is multi-stage. As I told you earlier, also it is starting from the production till the consumer. At each stage, tax is being levied. Okay, so it encompasses all indirect taxes which are levied at each stage. GST is imposed from the production till the end party or the final consumer. Okay, so this slide shows the difference between VAT and GST. As we can see that VAT is levied by the state government, and across states they vary also. Suppose if a good starts from Delhi and it reaches Tamil Nadu, at each and every state that it crosses have to pay the tax. Varied level of taxes will be paid by different states. Okay, so and there is no input credits in case of VAT, and it has to be paid only through offline mode, whereas GST is levied by both the central and the state government, and uniform rates are being followed by any state which belongs to India. Across India they follow only a uniform rate. So the input track credits is also available in GST. Both offline and online payments can be made for GST. Okay, so all the transactions in the blockchain are secured through a cryptographic hash. As we know, this blockchain is said to be the most secure form of storing records. So this will eliminate unauthorized tampering of data in the blockchain. Many applications of the government and other industries are finding blockchain as a technology which is very highly secure with minimal cost, and especially in financial sector this is used extensively. Okay, this slide shows about the income tax credits or input tax credits, ITC. Okay, so this what is blockchain? Blockchain is an immutable distributed digital ledger which is secured through advanced cryptographic algorithms. So the blockchain is a sequence of blocks, and each block refers to the previous block through a hash value which is generated at the end of the every block. Okay, so hash value is attached to the previous blocks so that it forms a chain of blocks. Okay, so the first block of the blockchain is called as a genesis block. So from there it starts with the blockchain. Okay, so additionally any data that is stored in the chain cannot be removed or modified. So there is no possibility of deleting any block, or you cannot modify the contents of the block. Even if we try to modify the content of the block, since it is a distributed network, the other copies in the network will not be able to be changed. And same way it is cryptographically hashed also. So any modification to the message will definitely affect the hash also. So the chain gets removed from the, the block removes from the blockchain. So that is not at all possible. So any data that is put into the blockchain cannot be modified or removed. The decentralized network, embedded consensus mechanism and the cryptographic encryption makes this blockchain a tamper-proof database. So transactions are accessed and verified at each level. So they are less prone to cyber attack. And SHA-256 is an algorithm which is used for this creation of this cryptographic hash. So this shows the blockchain technology, how it works. So once a block is created, the block is transmitted to a peer-to-peer network which consists of lots of nodes in the particular network. The network of nodes uses some algorithm to validate the transaction and the user's status. Then the verified transaction, can involve cryptocurrency, smart contracts, any type of records, maybe supply chain records or patient records or whatever it is. Any information is verified. Once it is verified, it is combined with the other blocks of the particular chain. Okay, so a new block is added to the chain only when it is being verified by the other nodes of that particular network. Okay, so then the transaction is now finished. Okay, so this is our proposed flow diagram. We have the input data, which is your GST data. All these the data is stored in a blockchain, and each of the blockchain, you have this hash code generation, and then we have this consensus mechanism through which the particular block is validated, and then the node is transmitted after encryption. So the at the receiver side, the same type of an authentication is used for decryption of the data. Okay, so the GST chain, what is GST chain? GST chain records each and every transaction that is involved in the GST. Okay, so any stakeholder, maybe the production person, a wholesaler, a retailer, all these people are all stakeholders. So any transaction that happens is being recorded in a blockchain. So these GST transactions are recorded in a chain based on the consensus with the stakeholders. Here the persons who validate the particular block are the stakeholders. Whoever is the stakeholder, they only validate that particular record. So there is no third party intermediation in that particular. So easily the transaction can be approved also because there is no intermediary third party. GST transactions are linked and stored as a blockchain using this cryptographic security, which is highly immutable and traceable. Okay, so making it immutable and traceable. So the linking of blocks in the blockchain ensure that they cannot be tampered with. So these transactions are digitally signed and linked to the taxpayer's account, and all of them are linked with the e-invoicing system with a unique GST IN number. Okay, so by linking all the transactions of the GST as a blockchain, uh, fake invoices can be avoided. Okay, so next we are going to see about various pros and cons of this particular GST. So what are the main pros and cons under the GST? Uh, because violation of GST can lead to revenue or loss of revenue to the government. So GST chain is effective in maintaining the tax liability of the taxpayers. As I told you earlier, this ITC is maintained. So it helps to know the tax liability of any taxpayer at any point of time. All as the transaction are supposed to be recorded in the blockchain, the ITC chain claims can be calculations can be performed much easier, and fake invoices will not have any significance as they are not available in the chain. So the ITC credits will be done in a proper manner. Okay, so abnormal transaction of taxpayers can be watched, and the respective officers can be intimated also. Okay, So the GST officers need not have any botheration about this ITC claims or for audit purposes or anything, because these can be calculated by the use of smart contracts also. So the delay in verification, need of original documents, and possibility of hacking or being avoided. Okay, so that is the major advantage of using a blockchain for GST. Thank you.